let's bring in our guest to talk about the markets as well. He's going to take a look from a technical perspective. We're talking to Matt Malley from Miller Tabak. Matt, great to have you on the program.
Great to be here.
You know, every technician I've had on recently agrees with the gentleman, if you heard the conversation before, that the technical setup right now is to the upside. Do you agree with that, and if so, why?
Well, it's, as we just mentioned, excuse me, as you guys were just mentioning, we got right down to that 100-day moving average. It's amazing how many times we've touched that since late December, and every time we touch it, we may dip slightly below it, and then we rally. The problem is when we rally and we break to new highs, which we've done several times, each time it's only a slight break of 1% or so. Although it's kind of an upward sloping channel there, my concern is that we haven't been able to break out in a significant way.
Do you think, do you agree with the traders that were speaking before you that the Fed meeting next week is an opportunity for this market to potentially get a leg up?
That it should be. I mean, every time that they seem to speak, at least leading into those meetings, the market tends to rally a little bit. The one thing is, can it break above 2150? That's that's kind of the magic number, 1% above the old high. Each time that's been a big resistance level. So if we can break above that, that'll be positive. But with interest rates moving higher and economic growth being pretty mediocre, it's going to be tough to do that, I'm afraid.
Well, and that's my follow-up question. What are you putting your money on, for a break higher or lower at this point?
I think with you have basically high valuations, and that's tougher to maintain when you have interest rates moving higher. And we also have GDP and earnings growth that are flat. I mean, they're doing a little bit better, but they're not very good. So I actually think the move, the eventual break, will be to the downside.
Target on the S&P 500. Well, we're mid-year now. Let's talk about the end of the year.
Well, I think let me put it this way. I think the near-term risks are greater than the near-term potential. So in other words, I think the upside could be 1 to 3%, where the downside is 7 to 10%. Although by year-end, we'll probably recover from a more meaningful pullback.
Okay, Matt, thank you so much for calling in. Really appreciate your time.
No problem.
We will check back in with you soon.